qualify for both and you're getting $5,000 from IFA and then $10,000 from the other program, there's a good chance that you're not going to need the seller to pay for any closing costs.
Yep.
So that could make your offer more attractive where, hey, we can pay the down payment and the closing costs. And if somebody else is putting in a similar offer asking for money back, that kind of puts you a step ahead.
Okay, Brett, thanks for coming on. I appreciate it. We're going to talk about just first-time home buying and home buyer credits and different loan products that you guys have, and I guess that are available for anyone that's purchasing in the Des Moines metro area. So give us a little intro about who you are and where you're with or who you're with.
Yeah, my name is Brett Tunkar. I've been a home loan officer for about 7 years. I'm with Wintrust Mortgage. Been doing this a long time. My favorite thing about the job is educating people and helping them reach their goals. I just really like having conversations to kind of bridge that gap from boring finances to helping you reach your home ownership goals.
And I reached out to you just because, we've met in passing a few times. We've done some business together. And quite frankly, I feel like you have a really good perspective of that first-time home buyer and home buyer in general, but those products that are not cookie cutter all the time and willing to get creative and make things, not only get creative with the buyer, but really just with the products in general. So yeah,
I love thinking outside the box, not going just the cookie cutter routes, and getting creative. And the traditional option isn't always the best option for you. We can always think through things and try to get creative with it.
So today we're going to kind of talk about, like we said at the beginning, two types of loans and how they could potentially be stacked together.
Yep. So the first program is a new program to Iowa. It's been around in the Chicago area, in Wisconsin and Minnesota, and we just got it this year, started last week. And it's through Federal Home Loan Bank of Chicago. It is a $10,000 grant that is partially forgivable. The nice thing about this is it is not technically just for first-time homebuyers, so anybody can use it. So if you have a situation where you bought it at the top of the market or whatever, and you need to move and you don't have a ton of equity, you can still take advantage of this program. And there are income limits, and it's only for specific counties here in Iowa. So it's in Dallas, Jasper, Madison, Polk, Guthrie, and Warren.
As we go through this stuff, if you want to see if you qualify for any of these programs, I'd highly recommend you take 2 action steps. One of them is reach out to me. Information is below. You can text or email me. And what I'll do is we'll set up time with myself, you, and Brett Tonkor, and we'll get on the phone and we'll just discuss, hey, is this or either of these programs ones that you might qualify for? And if there's a chance that you do, or we think that you do, or we're pretty sure that you do, we'll then set you up on an MLS filter so that you're getting emailed properties that fit the location and the budget that you would qualify for to get one of these programs, and make sure that you're seeing only properties that you're going to qualify for this program. So if that interests you, email me, text me, and schedule time with us. I'm happy to go through it with you.
The income varies depending on how many people are in the house. And it starts at $55,000 for a 1-person, and it goes up to about $104,000 for an 8-person household.
Okay, so this program is specific to your bank, not Noah. You can't get this program at any other bank.
Correct.
Okay, cool. Before we go to the other loan program for maybe first-time home buyers, help me understand it doesn't have to be first-time home buyers. If it's not your first time, is there any other rules or regulations? Like, is it just anyone that meets this income guideline can qualify for this grant?
Correct. Yep. So whether you're a first-time home buyer or you're buying your 5th home, you just have to meet the income qualifications. Minimum credit score is 620, like on any other conventional loan, and it can be paired with USDA, FHA, conventional, VA, any type of loan. And then that $10,000 can be given to towards down payment, closing costs. You want to buy down your interest rate, anything like that. The only thing is you have to have $1,000 of your own funds, and that has to be put towards the loan. So like if your appraisal is $500, that can count towards the $1,000 you need to bring. And then you have a home buyer education course that needs to be taken, and that whatever that cost can go towards that $1,000 as well. So and then you can use it for 1 and 2 unit properties. So it's really good for people that are looking to get into real estate investing, but don't necessarily have the funds for getting a 20% down payment or whatever it is. You can kind of house hack and buy a 2 unit home and put $10,000 of that towards your down payment of getting your new home.
Are they able to use any of the rental income that the property is getting if you're going to live in one side and the other side's already rented?
Good question. Yes. So it doesn't have to be already rented. So when they do the appraisal, they're going to do a rent comparable. And whatever that market rent would be, they'll use 75% of that to offset the payment a little bit.
Okay.
So you can use that towards qualifying.
Perfect. So it's $10,000 of a grant that's forgivable. What's the step year? Like if someone moves out in 2 years, what's that look like?
Over 5 years, it's fully forgiven. And then every month, it's partially forgiven.
So whatever amount you get is prorated over 5 years.
Prorated, correct. Yep. It's
Perfect.
1/60th of a payment every month.
Yep. How about, does the interest rate on those product or that product, does it change? Like, is it getting paid for in the back end through a different interest rate?
Another good question. Yep. So no, it has no impact on the interest rate. This program to lower income or moderate income neighborhoods to kind of help
Home
home
values
buying.
and yep, yeah.
We'll just get people to buy homes that normally may not be able to buy homes.
Yep.
So
And is
it's
it,
just there.
it's not per, you said neighborhood. I just want to make sure I heard that. Is it not per neighborhood? It's really per county.
Correct. Yeah. Yeah. But
Perfect.
that's they were just
They're
trying to, the benefits of Iowa Finance are the interest rates are just way better that you can get on any other market rate. The PMI is reduced, usually about in half. So, because most people are putting 3 to 5% down, sometimes less, and then they have the PMI on there, which can be a couple $100, which with Iowa Finance is going to be about half that. There's 3 options there. You can get a no grant loan, which is just going to have the lowest rate. The second one is you can get $2,500 of free money, fully forgiven whenever you can. You just have to keep the house for, I believe, a year. Second one is a $5,000 bond that is repaid back when you either refinance or sell, but it's $5,000 that can be towards your down payment and closing costs. That is also income driven. The income limits are actually higher than they are for the Federal Home Loan Bank of Chicago. Side note, I didn't realize this. There's 2 different calculations for 80% of the average median income. There's HFA, which is the what IFA uses, and then there's the HUD calculation, which the Federal Home Loan Bank of Chicago uses, and those 2 are different.
So each of those loans that we've talked about today, they both say 80% of median income, but it's slightly different.
Yeah. So,
So
Iowa Finance is 1 to 2 size household is 86,900 roughly, depending on the county. Or it can go up to 109,000, where 2 unit for Federal Home Loan Bank of Chicago is like 63,000.
not a little bit.
No, yeah, it's a big difference. Which I did 80% of a number is 80% of a number, you would think, but yeah, that's not the case for the home buying programs. With Iowa Finance, that is again geared towards first-time home buyers. You can buy a 1 or 2 unit property with that as well, and that has a home buyer education course that would be required also.
Now I'm going to kind of go in comparison mode, or like just how they differ, if you will, even though they could be stacked together.
Excuse me, Iowa Finance is also all 3 options. You can do rural development or like USDA, VA, FHA, conventional.
Yep.
So, and it can be paired with any program.
Yep.
The difference being is the underwriting guidelines for each loan type.
Gotcha.
And then for the first program, I mean, the biggest difference there is you get just like regular conventional rates, FHA rates. You just get the regular interest rates. You don't have the pricing breaks like the Iowa Finance Authority does. And then so with pairing those, if you were to find a home and you qualified for both programs, you can pair $10,000 grant with the $2,500 or $5,000 bond with the Iowa Finance Authority. So you could potentially get up to $15,000 towards the purchase of your new home. And you get the better interest rate. And depending on the purchase price, if you're putting that much down, your PMI is going to be adjusted as well.
And the overlap on these is first-time home buyers. That's the main qualifier. Well, it's not main. It's the qualifier. And then there's the next step is income qualifier.
Right.
If you want to combine both.
You can be a second or third time home buyer with the Iowa Finance Authority. It's just the program changes a little bit. The rates aren't as good. They're still very good relative to the market rates, but they're not as good for first time home buyers.
As we go into a spring market, in a market where I think, and you're probably seeing it too, there is starting to be more multiple offers. It's getting very competitive. Are either of these loan products, does the seller know that you're using these loan products, or like it's always better as a buyer, typically better as a buyer, not to share, hey, I'm bringing no money to the table for this deal. Is that on the front end part of the loan?
Yes, but I would say that that's also a good selling point, especially if there's multiple offers. They would have to, the seller does have to sign a document if they're using the bond, the non-forgivable
Yep.
$5,000 bond from Iowa Finance Authority. So they would be aware of that. On the flip side of that, if you can qualify for both and you're getting $5,000 from IFA and then $10,000 from the other program, there's a good chance that you're not going to need the seller to pay for any closing costs.
Yep.
So that could make your offer more attractive where, hey, we can pay the down payment and the closing costs. And if somebody else is putting in a similar offer asking for money back, that kind of puts you a step ahead.
Yeah, I was just thinking like during inspection, those items that you want to be fixed, you could use your funds or those grants to pay for some of those, or at least cover that. Percentage wise on the property values, obviously with income limitations, you're not going to be able to like buy something too high priced, right? Is there a percentage that, hey, you can't have the full 10K plus the $5,000 grant if the price of the house is, say, a $70,000 house because it's such a high percentage of the value?
For the $10,000 grant, no. From my understanding, there's no reason there. But for the Iowa Finance Authority, it's 5% of the purchase price.
So it can't be
So
more than
anything $100,000 and above, you'd get the 5,000. Anything below that, you would get 5% of the purchase price.
okay. And that $2,500
For the $2,500 grants, that's just what it is. It's $2,500, and then for the second loan is 5% of the sale price. So
okay, perfect. So it's two separate.
Yep.
Okay, so I think I'm sure there's more details about these loans that if someone wanted them, we could reach out to you and walk through what exactly all of any more details are about them. But let's go into the process. So do you need to have these qualified before we find the house? Do we need to find the house before, obviously get a pre-approval letter? What does that look like? So let's just step one. If someone's like, hey, I think I qualify, I think I can find a house roughly in my price range. How do we start that, or what's that look like?
Yeah, I think the first thing is to have a conversation. So I know what your goals are, what you're looking for, and I can better understand your situation. And I think applying would be the best option. That way we can for sure know that you credit qualify and get you pre-approved. In most cases, that would be good enough to go forward, go make offers, go look at homes. With this program being, it's a little more in-depth on income and making sure we're checking those boxes. We'd collect your pay stubs, W-2s, just to make sure that the income meets the qualifications. Because the last thing you want to do is go find a home, then not be able to purchase it. So yeah, in this situation.
On the application, two things. Do you have to indicate that you want one of these programs?
No, nope.
Okay.
You don't have to indicate. Like I would just put that on my end, but no, you don't have to indicate that.
Perfect. And then two, you're essentially getting a pre-approval, not a pre-qualified letter. The recommendation is if you're going to use one of these products, because there's such a stringent guideline on the dollars, it's better to do the extra week of work of gathering this stuff, get it to you to get a true, okay, your income, your credit all qualifies for this program. Now you can go shopping.
You understand what you're getting into, and that's stuff that you're going to need to collect anyway. It's just you're getting it knocked out on the front end, and then you're going to put yourself in a much better position to go ahead and buy a house. Awesome. And I mean, we've seen it a couple of times where people, they get into the process and they're $1,500 over the income limits.
You made $1,500 too much to not make $7,500 on the back end.
I mean, if you do, we've had this too, is you qualify for the home program, you start looking, you get a promotion or you find a new job, and then that sets you over the edge. So, and that's another thing to consider as well. Not saying that you shouldn't accept a promotion or anything, but know that if you change income, that could change what you qualify for.
On the application, does it hit your credit score when you apply?
It would. So when you do get pre-approved, it would be a hard inquiry that would impact your credit. In most cases, that's very temporary. I mean, depending on what's on your credit, there's a ton of variables there, but then you do have 45 days where it's just blocked off for mortgage inquiries where it wouldn't impact your score. I think if you're serious about buying and you're wanting to make offers and things, get it done, because that gives you 4 months make an offer and close. Again, it's one of those things you're going to have to do it eventually. It's better to know up front exactly where you stand so you have your plan of attack on how to move forward.
And when you say 4 months, that's a 4 month. What do you mean by that?
So once you have your credit pulled, it's good for 120 days. So you get 120 days where we don't need to repull credit.
Gotcha. Close or offers?
Close.
Okay, so we need to
So
close within 120 days of when you got pre-approved.
yes. Otherwise, you would just need a second credit pull, and then that would give you another 120 days. FHA would be better fiscally, I guess, if you're wanting to use your dollars more, but with FHA again comes the more strict appraisal. Yeah, if you want to, if this is something you're interested in, you want more information or just information about home financing in general, I'm happy to help you. Call or text me at any time. I'm always available night or day. You can email me, or I can send Darson an app to my or a link to my application and or my website.
Cool. And when someone fills out an application on the website, is it your specific name that like they're going to be working with you the whole time?
Yeah, yep. So I would be the point of contact. It's my website that has all my information on it. If you click on any links, it comes directly to me, and
Perfect.
yeah, all my information will be on there as well.
Awesome. Well, I appreciate you coming on here and just educating us on these programs. I know everyone thinks, financing is boring and it's part of the home buying process. But when you're educated about the financing process, you can make really smart and wealth building decisions, which
Mhm.
it's one of my advocates for all my clients that I work with is I want you, even if you're going to put a low down payment on a property, I want to make sure you're buying a property at a good price, you're not overpaying for it, and you're getting good value so that if your life does change in 2 years, you
Yeah,
can sell it and still not be underwater in technical terms, right, with the mortgage. So I think this
yeah,
program and I think you can help out a lot with that. So I appreciate you coming on and helping us out.
yeah. No, I appreciate it.
Cool.
So
See you
yeah,
next
thanks
time.
for the time and
Thank you very much. I'll
yeah,
see you
appreciate it,
next
man.
time and talk to you soon.
All right, thanks, Darson.
Yep. Bye.